Hey traders, John Fortune here with this week's weekly Forex forecast. Hope everybody's having a fantastic weekend. Next week is a huge week in the markets. Why? We have US CPI, we have FOMC and interest rate decision out of the US next week, and we also have the BOJ meeting on Friday. So going into next week, there are some setups that I like. We're going to be looking at in today's video, and also how we can play FOMC next week, potentially both ways, to the long side or the short side with the dollar. So quick look at the economic calendar. First of all, we had two interest rate decisions last week out of Australia, out of Canada, and both came out essentially hotter than expected. In other words, we got unexpected rate hikes from the RBA and from the BOC. Now, why is this? It's to address the re-acceleration of inflation that we've been seeing globally, something that I've been warning about over the last few months. We have seen that develop, and as a result, we've seen the dollar and stocks rallying together. And now we're in the part of this process where central banks have to do more. Remember, the Bank of Canada were one of the first early pause of the hiking cycle, now forced to again start hiking. And this not only sets up some good setups in the Forex complex next week, but it's an indication of what we can expect coming up this week with FOMC. So if we have a quick look at this week, you can see we do have CPI coming out on Tuesday and also FOMC on Wednesday. And the other important piece of data coming out, apart from the interest rate decision on Thursday out of Europe, is the BOJ on Friday. So an absolute jam-packed week. First and foremost, I would suggest taking a little bit less risk next week, not going too crazy unless you have some high conviction in the actual events themselves. But we know these events can do two things. First, they cause markets to correct, especially if we have FOMC on Wednesday. I would anticipate not much happening in markets generally between Monday and Wednesday, and then from Wednesday onwards start to move. But also they can be unpredictable. But why do the interest rate hikes last week potentially point towards what we could see this week? Well, I do think there's a good chance we also see a re-acceleration or hotter than expected inflation coming out in the US. And alongside that, we could see the FOMC event unfolding in a way which Jerome Powell comes out and essentially is more hawkish than expected, or he is hawkish, and maybe even an unexpected rate hike out of the US as well. So that's what's coming up next week. That's my bias. On balance, I do think the risk is an upside in CPI and also a more hawkish FOMC. Okay, so let's have a look at the scorecards for the coming week, because there's a few key takeaways here which really set up the trading plan for next week that I have and I'm going to share with you today. First and foremost, let's discuss the dollar, because the dollar and the euro are actually both decreasing in the scorecards, but the dollar is still in the positive side and the euro is still in the negative side. So overall, I would be bearish euro dollar. And fundamentally, we have a very, very interesting setup heading into next week. What is that? It is that we have the Federal Reserve and the ECB in the same week, where the Federal Reserve may have to battle with a hotter than expected inflation print and come out hawkish. At the same time, the ECB could disappoint because of Germany slipping into a recession recently. Now, I do think on balance, the greater probability of those two is potentially a higher than expected inflation print in the US and the Fed comes out extra hawkish. Maybe the ECB doesn't disappoint, but even if the ECB doesn't disappoint or come out dovish, they are not, or they're going to be put off getting really hawkish, I would imagine, because of the recession in Germany. So next week sets up a fundamental catalyst where we could very well see euro dollar start to catalyze to the downside. And in fact, all of the dollar pairs as the dollar picks up steam to the upside. So that's my base case for next week. Of course, these things are always subject to probabilities. They're not guarantees. I do not have a crystal ball, but that is where I think the risk lies, and I think we could end up with a much stronger dollar by the end of next week. Now, interest rate decisions aside, outside of that, we have the pound and also the Canadian dollar, which are setting up alongside the Swiss franc very nicely versus primarily the New Zealand dollar, I would like to be short, and the Japanese yen, I'd like to be short. And especially going into next week, we had the unexpected rate rise out of Canada. So this gives us a bit of a tailwind to the upside in the Canadian dollar. And at the same time, we've seen the New Zealand dollar coming out of that previous meeting. Very, very weak. We got that sell-off. And now also this week, we had the new BOJ governor cautioning against adjusting yield curve control too soon. And so forecasts have been pushed back now for that adjustment in the BOJ yield curve control program. So that is fundamentally bearish for the yen as well. So we've got two currencies here in the scorecards which are projected to be the best shorts, and they have tailwinds to the downside from their central banks. And we also have a couple on this side. Aussie dollar you could also look at, versus New Zealand versus the yen. But certainly the Canadian dollar is one to watch next week, coming off the back of that unexpected rate hike. But also alongside that, I like the pound and the Swiss franc. So those are the key markets outside of the interest rate decisions that we're going to be looking at next week. Pound New Zealand to the upside, pound yen to the upside, CAD New Zealand, or I should say New Zealand dollar CAD to the downside, CAD yen to the upside, and then New Zealand franc to the downside and franc yen to the upside. Okay, so let's have a quick look at the individual currencies before moving on to the best markets that I have on my watch list in the Forex complex heading into next week. Starting with the dollar index, we're looking at the weekly chart here just to have a big picture overview of what's going on. We did bottom over in this area somewhat. We came down. It's not confirmed until we break this high. This is the double bottom confirmation point where you would normally expect even a downtrend to actually come and test and then maybe come down. But I anticipate us breaking through here with momentum. And it could very well be next week with that dynamic we discussed, with the Fed getting a hot inflation print on Tuesday, coming out hawkish on Wednesday, and then the ECB may be somewhat disappointing on Thursday because of the recession in Germany. That could be the dynamic which sends the dollar back up to the major high over here and even through it with a strong momentum to the upside. So going into next week, I don't think anything's really going to happen until we get CPI and FOMC on Wednesday. I would not be surprised to see this bouncing between the 7 and 2 year breakout, maybe coming down testing here before reversing on FOMC. That's what I think is probably going to happen. But with FOMC, with these big news events, you never actually know for sure. So that's just what my view is. We'll have to wait and see, and we're going to actually look to see if we can be reactive next week. So we've got markets here which we can look at if we get dollar strength, which is my base case. But if that doesn't materialize and we see dollar weakness, there are markets here we can look to go and take advantage of that as well after the interest rate decision on Wednesday, being reactive instead of predictive. Next is the euro. My view has been, since we've been correcting, as many of you will know, that we're coming back to the low down here in the euro, and that this double top over here will break the low here eventually and go with momentum and then end up coming down testing this. And that would be the next big test. I mean, if this happens, in a global recession, maybe later on in the year, this could be where we start to see the Fed printing money again, and that could actually be the bottom in the euro and the top in the dollar, etc. But going into next week, just looking at the euro, really the inverse to what we just discussed in the US dollar, I would not be surprised to see this pulling back somewhat, and then next week actually being the catalyst where we start to accelerate to the downside. First testing this low and breaking through here with momentum over the back end of this year. So we could, just to be clear, we could break here next week, but it's going to take a little bit longer to come all the way back down to the low if that's going to be the case. Next is the pound. The pound has been breaking higher ever since we had the flash crash down over here. However, I do think maybe we come back and retest it one more time. Either way, I do think that this is pretty much the end of the road for the pound. And as we get the dollar breaking out of that major double bottom in the weekly, I do think, because don't forget, in the dollar, really in the big picture, we just got a big bull flag. So if you go back and look in the larger time frames or the higher time frames in the dollar, you will see it's a bull flag. It's actually overall trending to the upside and we have a correction. So I do think that coincides with a breakdown in the pound. However, going into next week, I think relatively speaking, this is one of the better currencies to be long. Next is the Swiss franc. At the start of the year, I highlighted this market up to 117. We have had nice move up into this area. I actually traded a chunk of this with Aussie franc shorts and CAD franc shorts, and this now is a correction of consolidation. Maybe we come down a little bit more, but I am looking for this to continue, and at the very least, on a relative basis, I like the Swiss franc heading into next week. Next is the yen. Now, the yen is actually probably my favorite currency going into next week. We have the BOJ on Friday, but we have a breakdown in the yen. We're making lower lows and lower highs, and I do think as long as the BOJ doesn't come out and surprise and do the opposite of what it's been saying, which we've seen before with central banks, thinking back to the SMB where they said they wouldn't remove the Swiss peg and then they removed it. So central banks do have a history of telling porcupines sometimes. However, assuming that's not the case because of the outlook in inflation and everything else in Japan, then this market is very, very likely coming back down to the prior low. So I do really like this, and I think this is actually one of the best shorts heading into next week. Would be good to be out of yen shorts before Friday. So, if we can get the shorts up to Friday and then get out of them for the meeting, that would be the best way to play the yen next week. Next is the CAD. Now the CAD is coming up to test the prior high over here, and I do think that's going to complete the ABC that we've been discussing, this kind of big bear flag in this consolidation. So somewhere in this area, I do think the Canadian dollar starts to roll over, and very well that could be the case from FOMC even next week. Maybe we rally up here and then we reverse as we get a stronger dollar on FOMC. Either way, I am looking to potentially take advantage of this final move into here, and that to materialize in the form of strength next week. So CAD yen to the upside and also New Zealand CAD to the downside, the two that I really like. Next is Aussie dollar. Now the Australian dollar actually performed pretty well last week. We had that, of course, surprise interest rate hike. However, I don't think this is enough to reverse the trend with everything else going on, especially if the Fed come out and they turn pretty hawkish again. I know the Australian dollar is not part of the dollar index, however, does tend to move opposite to the dollar based on everything else, and all of the other foreign exchanges also moving against dollar, etc. So I do think if we start to see the US dollar breaking higher, that this is going to come down. I do think we're coming back to the low. And at the moment, we're just seeing this very kind of choppy price action. Whether we actually take out the high or not remains to be seen. And in fact, for the time being, this is actually a breakout still of, from here to here, is a breakout of this consolidation pattern. And this, therefore, is potentially a 1 and a 2 wave. Unless or until we break this high, this should be considered a corrective move to get involved for the next leg down. So really off the list next week because of that interest rate hike. It's not a great buy, but it's also not a great short. So I think there are better markets next week. And finally, New Zealand dollar. I've been looking for New Zealand dollar ever since we were testing up here. I said to you, I'm looking for this to come back to the lows. And we started to make our way down. Very similar to the Australian dollar, we got this breakout, and now this is just simply a correction. So still viewing this simply as a 1, and this is part of a 2 wave. So looking to enter shorts in the New Zealand somewhere in this area for a 3rd wave down into this area. So keep your eye out for this, because this move down could be quite sharp. Doesn't have to necessarily happen next week, but I certainly think in Q3, which we're only about 20 days away from, I do think that we could start to see the next bigger move down towards these lows as we go into Q3. Okay, so let's have a look at some of the best markets on my watch list heading into next week in the Forex complex, starting with crude oil. Now, obviously, I know it's a commodity, but this is a market we look at every week, and I give you both the up and the down band here, and essentially, this means one of two things. I'm only still looking to be short in crude oil. I only favor shorts. We've had the opportunity over here. This was a really nice move down into the lower bound. I can't remember if this was the actual one that was, this wasn't the one that was there, but it did. I remember tested it, and then it pulled back. And again, coming into this week, there's only two things I'm looking for here. If we continue to correct or we get a pullback, I'm going to be looking for a breakdown in the direction of the trend into the 67 area. But if we continue the trend and we consolidate all the way up to the 74 area, this is an area where you could start to look for shorts. Even at previous highs, previous resistance, you could start to look for some near-term shorts in this area. So either breaking down intra-week, looking for a short, or if we pull back to the upper bound, that would be another place I'd be interested in some short-term short opportunities in crude oil. I still don't think crude oil is one of the best markets to be trading. I do reiterate, I look at this every week for you guys. I think these are better markets, personally speaking, next week. So the first market we're looking at is pound yen. There was a consolidation over here. Can you see it struggled and then it started to break and then it pulled back down. It's this high over here. We've now started to break, had a small test with momentum, and any pullback in this area next week is viewed as an opportunity to look for longs into the 177.50 area. Next is CAD yen. Unlike the other market, you can see we're still struggling above this previous high. So what I'd like to see is this actually pull back early next week. And as we get a deeper pullback away from the target, we can look for this reversal intra-week and then up to the 106 area up in this area. So this is the market that I do like going into next week. We've got the tailwind because of the Bank of Canada unexpectedly raising rates, and at the same time the Bank of Japan coming out and saying they're not going to adjust yield curve control. So this has really good fundamental tailwinds backing further upside in CAD yen. Next is franc yen. Now I prefer the other two, but going into next week, any pullback in this market would be viewed simply as an opportunity to start to look for breakouts to the upside. I'm going to be looking up to the 156 area. Next is pound New Zealand. Now last week was a bit of a low volatility week. We saw the dollar kind of correcting, and we saw a lot of markets correcting. I mean, you go and look at New Zealand dollar to the downside, you've got that breakout, and then it just kind of pulled back and it's doing this. Similar to pound New Zealand. Was looking for this to go high last week. We did bounce, but we didn't kind of go anywhere. We just consolidated. So any pullback again is simply viewed as an opportunity to look for bullish setups in this market up towards the previous high, which sits right in the 2.07 to 2.075 area. Next is New Zealand CAD. Now this was a market that traded right into the max profit taking zone last week, and these boxes are here to show you when the odds for further downside in this case or upside turn against you. So when you trade into these areas, yes, the market can go through them. The market may also not reach them, but if the market pulls into these areas, this is where the odds are for you to start looking to book profits on short-term trades. And had you done that last week, as soon as you touched it, you can see this started to bounce. Going into this week, I do like shorts once again in New Zealand CAD. I do think it probably needs to correct a little bit first, but any continued pullback is simply viewed as an opportunity to look for bearish reversals down to the 0.8100 area. And the final New Zealand pair here is New Zealand franc. We have started to pull away, and I'm viewing this just simply as a big correction of this momentum move down. Any continued pullback in this market is simply viewed as an opportunity to look for those bearish reversal patterns down to the 0.54600 area. Okay, so let's have a look at the dollar pairs based on FOMC next week. So waiting for FOMC to come out, and the markets highlighted in light blue are essentially my base case, my primary setups that I'm looking for, where we get dollar strength from the FOMC meeting because of reasons discussed in this video. In that case, I am going to be looking towards US dollar yen to the upside, New Zealand dollar to the downside, euro dollar to the downside as some of the best trades. And also, I'd be interested in gold to the downside as well. Now, if, and this is where we can be reactive, so if we're wrong in our initial base case, and we're waiting anyway and say the opposite happens, we can then go and look at some dollar week setups, and that would be pound dollar to the upside because the pound is structured as one of the better currencies, and US dollar CAD to the downside. So shorting a weak US dollar after FOMC versus a stronger Canadian dollar as it currently stands because of that tailwind from the unexpected hike. That would be a good short post FOMC. And also silver, which is actually holding up better than gold, is also another opportunity to short dollars next week if we get weakness from FOMC. So starting with US dollar yen, I do really like this market. Any pullback, especially if we pull back like this into Wednesday and then we get strength on FOMC, I'm going to be looking for a post interest rate decision move into the 141 area. Next is New Zealand dollar. Now we're currently correcting. Here is a momentum move, here's a correction. Here's a momentum move, here's a correction. So just like over here, I am looking for this market to, even if it comes a bit higher, to start to stall out. And if we can get the reversal on FOMC, that's going to be an opportunity to look post FOMC for shorts into short term, this low over here to the 0.6030. But I do think overall we're coming down to this low, and I do think we could even break this low with momentum over the next few weeks. Next is euro dollar. Now euro dollar is consolidating, correcting after this down move here. And yes, we could see this come a bit higher, maybe into Wednesday. And then if we get that weakness, so that would be dollar strength on Wednesday, that would be the opportunity to look for a follow through down towards the prior low, which sits right in the profit taking area here, down at the 1.0640 area. Okay, so moving on to the plan B setups next week. Now, if we get strength from FOMC, I expect pound dollar to go down and I expect US dollar CAD to go up. That actually is my base case. The markets here in blue are simply if that doesn't materialize and instead we get weakness for whatever reason in the dollar next week. So if that's the case, and we're waiting for FOMC and not much happens, and then you see dollar weakness, I would be looking at pound dollar to the upside as a good market to pivot to up towards the 1.2700. Next is US dollar CAD. Now again, US dollar CAD could very well double bottom and explode higher if we get strength from FOMC and maybe even higher than expected or hotter than expected inflation print, and let's say maybe even an unexpected rate hike. Then I would not be looking to short US dollar CAD or pound dollar at all, or gold. But if we get a correction into FOMC and the opposite happens, we get weakness in the dollar and it sells off like this, that first move there post FOMC, I would be interested in looking for shorts down towards the 1.3230 area. Okay, so wrapping up the video with gold, silver and Bitcoin, and we're on the daily chart here, starting with the gold silver ratio. You can see we're breaking lower and we're heading down towards these lows potentially. It's kind of corrective because, you know, you could argue that we're going to bounce here, maybe move higher, but overall I think we come down lower, and I do favor silver over gold to the upside next week, or in other words, the gold silver ratio lower. But what that means is, it means that if we get a stronger dollar, like with these three here, post FOMC, I would prefer to be short gold instead of silver. And we're going to be looking at silver in the opposite direction if we get a weaker dollar post FOMC to be reactive and actually be long silver, which of course is priced in dollars. Okay, so starting with gold here on the 4-hour chart, you can see we're starting to consolidate really from here over in this area. If we can come back and test these highs, especially before FOMC, it's going to be a great place to start to look for a reversal, perhaps after FOMC. And we also have CPI, don't forget. And then down to the 1920 area. Now, as a plan B, if we get weakness from the dollar after CPI and also FOMC on Wednesday, then perhaps we can see this correct down into Wednesday, and then we get that rally to the upside. Why? Because we get that sell-off in the dollar, and that would set up a reversal trade or reversal setup in silver to the upside into the 25.20 area. You could look for these lows over here. And last but not least, we have Bitcoin. Now, I have been highlighting in Bitcoin this key area here, the 25,200, as the target. And it's been very, very slow. Every time we've pulled back, I've been saying this is where I'm looking to come down to. And we're almost there now. And it does look like we're going to trade into this next week. I'm going to leave that on though, because if we can break through the 25,200 area, I do think perhaps on a pullback, this is then likely headed down to the 2400 area. And it could very well do this next week, especially as we have the ongoing SEC regulations and that pressure from the SEC, which they're currently putting onto the crypto markets. So that is it for me for this week, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the room each day where I go through these markets and the setups that I'm personally looking at with members on a daily basis for over 75 markets in different asset classes, including stocks, bonds, Forex, and commodities.